I know, I've been incredibly bullish on Alibaba to say the least, to the point where I allocate a disproportionate amount of my portfolio to a single company. So as the title suggests, I'm going to confront all the potential risks involved when putting your money in a communist country. And also, in a communist country, we demand people to smash the like button. If not, we will start deducting your social credit scores. Also, this video is sponsored by Weibo. So I know many of you smart investors out there have already taken advantage of the different sign-up rewards in the past 3 months. But in case you haven't, Weibo recently leveled up their game again. And from now until the 30th of September 2022, every new sign-ups will get up to $130 USD worth of Tesla shares. So I'll leave the link and instructions down below. Essentially, you just need to deposit at least 2,000 Singapore dollars and execute one buy trade of a stock or ETF and one option, and you'll get an 8% ROI from the sign-up rewards. Definitely a lot better than Alibaba. So I'm currently using Weibo for my 15,000 portfolio as well. So don't let this guaranteed deal get away. Link in the description box. So the general convention of trying to define risk, at least in the investment world, is the chance that an outcome or an investment's actual gains will differ from an expected outcome or an expected return. So quantifiably, many scholars like to use this term called SD, which is standard deviation, which provides a measure of the volatility of the asset prices in comparison to a predisposed benchmark. However, as retail investors, I think we view risk in much simpler terms, because we ain't scholars trying to use complex mathematical formulas to justify a point. So in layman terms, personally, I'm only concerned about two things. That is, the probability that I'm going to lose all the money that I'm putting into the market, and how volatile my positions are going to fluctuate in a given time frame. So on the first point about losing all your money that you have invested in this particular company, it's also technically called idiosyncratic risk, or basically bankruptcy risk, where the company just goes missing or go under or something. So if you're afraid of this, then you shouldn't be picking stocks in the first place and just go into a broad-based diversified ETF. So unless the whole world goes bankrupt or something, locking yourself into an index probably wouldn't do too badly. On the second point about the daily fluctuations, there is this thing called the sleep test. So if you can sleep well at night with your current portfolio holdings, then yes, you're probably good to go. Now, let's break down both types of risks around Alibaba as a company and an investment. So by looking at the probability of Alibaba going to zero today, there will probably be two scenarios that will cause this to happen. Either Alibaba goes bankrupt, or it gets wiped off the face of the earth due to whatever reasons. So on the first point of Alibaba going bankrupt, I think many investors, including bears of Alibaba, will agree that Alibaba is currently in a rather comfortable and rather stable financial position. From its balance sheet to their cash flow projections, we should be fine, at least in the near foreseeable future. As of their latest quarterly results, the group holds around $67.5 billion USD in cash and short-term investment. Yes, you have heard it right. $67.5 billion with a B. So the entire business is currently valued at around 220 to 250 billion, notwithstanding the daily fluctuations of the stock price. So in essence, around 30% of the stock you are buying today is its underlying cash asset. So $30 of Alibaba's current $95 share price is purely its cash position. So that said, there is definitely a possibility of fake reporting, and the billions of dollars in cash reserve that you see today on their balance sheet might very well just be fugazi. But Alibaba is not a new kid in the block. They've been in business for 20 over years and are considered the dragon head of China today. So I will assign a rather small probability to the scenario of fake reporting occurring. But who knows? It's a communist country. Now, the bigger concern for many international investors will then be the second instance, where Alibaba just goes missing for whatever reason. So the biggest culprit for Alibaba potentially going missing overnight will probably be attributed to our pals over in the Chinese Communist Party. So the most commonly cited example would be China's edtech industry, where many of these up and rising edtech companies collapsed in value by more than 90% when the CCP decided to ban for-profit private tutoring overnight. So I think those are extremely valid concerns. But if you were to join me in this thought experiment, let's try to project outwards. So Alibaba's core business still revolves around the e-commerce industry. And Alibaba is still the market leader in this specific sector, with close to 50% of the entire e-commerce pie in China today. So in what scenario do you think that the government will try to pull off such extreme measures? Probably in the arena of trying to ban the use of e-commerce platforms. Maybe because the average Chinese citizens are spending too much money on those said platforms, and maybe they don't want the economy to grow. That will actually be quite an interesting sight. Truth be told, both Alibaba and Tencent is deeply entangled together with the entire Chinese economy. So pulling off something like that, I'm not saying it's impossible, but it will inevitably cause collateral damage to not only the company in question, but also normal people's lives, their livelihoods, employment, GDP, and basically the whole country will sink together. So of course, I'm not ruling out the possibility, because the impression is that, hey, the CCP is crazy and China don't exactly know what they're doing. But I just happen to be in the other camp where I don't think they'll pull something like that to bring the country down. So, now that we have established the fact that it might not be advantageous for them to destroy Alibaba, let's talk about the potential of a quote-unquote nationalization event to take place. So what happens if they just take over Alibaba and let the government run it? So for pundits at the side, yapping on and on about how CCP is cracking down on big tech because they wanted control and they are slowly losing control, I still don't understand how they got the impression that CCP was losing control, at least in the last 5 years. Besides, which do you think is easier to control? A few big ones or a whole jing bang of them? Now, back to this topic of nationalization. I would assign the highest probability to this nationalization scenario. So by nationalizing, I don't mean a complete takeover by the state, but more so some sort of a participative framework, very much like your listed state-owned enterprises. So you don't have to look far. For those of you who have followed the developments of Ant Group closely since the end of 2020, you will know what I mean. So in similar fashion, would it cause the valuation to plunge to zero overnight? Probably not, but I think as investors, you just have to fundamentally monitor the quality of the businesses as time progresses. And that would probably drive returns in the long run, whether is it state-owned or not. Now, pivoting over to the volatility around Alibaba. In hindsight, after the close to 24 months ordeal, we understand that low can always go lower, and no valuations is too low as long as there are more sellers than buyers. In the short run, the market is a voting machine. But truth be told, I don't really care about the valuations of Alibaba today. Besides, for those of you who are accumulating for the long term, shouldn't low valuations for a prolonged period of time be better for you as you seek to accumulate more at lower prices? So I think it's also an open secret that there is a great deal of volatility around the entire basket of Chinese equities. So on a good day, a senior member of the CCP can say something good and it pushes stocks up by at least 10 to 20%. And on a bad day, the chairman of the SEC can say otherwise, and it sends all these Chinese stocks tumbling down. So if you're really in it for the long haul, I guess it shouldn't matter to you. At least, that's my own opinion. Personally, however, I think the only risk that you should be worried about at this juncture is actually execution risk. So for many of you who have been diligently following Alibaba's earnings quarter, you would have realized by now that many of these matured Chinese big tech counterparts, even like Tencent and Baidu, have slowed down considerably as well. It does seem like currently there are many investors kind of trying to justify the slowing in growth to the broader macro environment. But I think it is also timely to remind everyone to put more emphasis on the business quality and their competitiveness, rather than all the noise that is in the market today. So just recently, a friend sent me a report with a graph from Goldman Sachs. So brace yourself before I show it to you. You ready? Goldman Sachs actually predicts that Alibaba's e-commerce market share in terms of GMV will plummet from the 50% in this year to 39% by 2025. and I'm currently in the midst of going through the entire Goldman's report. So I promise you, I will apprise fellow backholders after I understand the basis of Goldman's assertion, and I believe that it deserves a video on its own. So at least for now, it's purely a prediction model that the analysts over at Goldman Sachs churned out. So we will talk more about it in a subsequent video. So when compared to discussions around Alibaba going bankrupt or Alibaba getting nationalized or the CCP cracking down on them, I'm more concerned about their competitive advantage and the erosion of the market share. So with that, do leave in the comment section down below, in your opinion, what would be the biggest risk factor for Alibaba. I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!